All right, I thought I'd give my thoughts on some of the major markets today, start of the week. Um, let's start with the big picture in the stock indexes. S&P 500, big picture is decreasing volatility bull market, which went into its final phase with this increase in volatility here. Could have gone either way, could have been a blow off top, but instead we have undeniably ended the bull market. Like, this is completely out of character, but we seem to have found, at least a temporary bottom. And what is the highest probability outcome is for it to spend the rest of the year faking us all out, making us think that the worst is over, and then really getting started with a savage bear market. So let's have a look at the daily chart. What you can see here is that we have a very strong kickoff off the lows, indicating that we're probably going to get a second leg. So when we have a kickoff this strong, what it means is that there's traders who were planning on buying the dip, but they just they weren't fast enough on the trigger, and they've missed out. And so if this was going to be another leg down, like it looks like a bear flag, at this bar, this would have gone down. So this little break of this daily bar high here, this is the clue that we're probably going to end up at least, somewhere up here. Now, we're still in a bear market and a counter trend move within a bear market. So what we can expect is this to be choppy. Now, look at this. We've got a day where it went up and down in the day, up day, down day, up day, 2 down days, up day, down day. That's just choppy bullshit, right? So once the markets start becoming choppy bullshit, they tend to continue becoming choppy bullshit. So we can expect it to eventually get to at least about here, maybe even up here, but we expect it to go like up, down, more of this choppy bullshit, right? Okay, so the bias is up, but because we're in such a high volatility market, we can expect it to be unpredictable and just to go all over the place. I would not trade this market at all. We're probably going to go up, but the easy moves have been made. We're probably going to get there. Who would know? Now, let's look at some other markets. Bitcoin is quite interesting at the moment. So we have this, which technically it's a bear flag, right? Like, it's a downtrend and then a pullback. But what happens sometimes with these very, very big bars is that it looks like a bear flag, but this has really flushed everyone out. So everyone who had, if we look at the bigger picture, everyone who had stop losses here got shaken out. Everyone who didn't buy at the exact lows is scared anyway. So essentially what's happened is that we've got brand new players in the market, and these brand new players have a very low tolerance for pain. If this market goes below here, it's probably going to go a lot lower. But right now you can't expect this to keep going down because all the sellers have been vanished. Everyone who was going to sell sold on that day. So the longer this goes sideways and choppy, the better this looks. This chart is actually quite significantly better than it looks, and if it recaptures up above here, which is the big test for it, then we start to paint monthly candles, which look pretty damn good. Like, that monthly candle is awful, but a big lower wick. If we close above this monthly candle, this market could be back on again. It's definitely one to watch. Let's look at gold. So gold painted this monthly candle with the big shakeout. This is an extremely bullish candle. This is a fail to go down. The low of this candle is above the low of that candle. On a daily basis, we had the big shakeout and a complete round trip, and now we're chopping around. Once this market closes above here, you can expect it to take off. If it closes below here, you wouldn't want to be in this market anymore. Okay, what else have we got? As far as stock charts go, if Amazon breaks the high of this candle, that's pretty nice. Okay, I'm not much of a stock trader, so I probably should refrain from talking about stocks. That's not really my area of expertise. What is my area of expertise and what is the most interesting market right now is currency markets. So when the badness started, we had this incredible short squeeze up. Last week painted an incredible pullback down. So the daily chart looks like this, and now we're taking off again, but we're taking off in a manner that is not convincing. You can see this candle. Look at the range. This range is slightly smaller. This range is slightly smaller so far. So this is not a particularly compelling setup either way. But again, a drop below here or a gain above here, or any sort of expanded range strength bars, like you can see here we have like expanded range, anything like that, and this becomes a very, very strong buy. Let's look at bonds. I'm going to use TLT as a proxy for bonds because it's a bit difficult with the rollovers. So you can see what happened was they had these big gap and fail in the middle of the madness, complete market dislocation. See how awful these candles look. They just look like they don't make any sense at all. That's because they didn't make any sense. Like this was just a really, really bad thing. And what we have here is a very classic retest of the highs. So if we look at a weekly, we have a gap fail, and now we're retesting the highs, a break below any weekly low here. Very strong short. This short could stay in place forever, like forever ever. Let's look at a monthly chart of this, and you can see what I mean. This is a classic blow off top in interest rates, and I would be really surprised if we got up here. The problem with this trade, though, is that the Fed is determined to keep it in play. So this is the it's not a back adjusted chart, but let's look at the 30-year bond, which is the same basic thing, right? The Fed's goal is to keep control of the interest rate market. That's how the whole thing works. When it loses control, there's real problems. So TNX. Okay, so this is the 10-year interest rate. Going back, it's easy to see the interest rate rather than stitching together all the bond futures charts. So you can see clearly that in the from the 60s through the 1981 we had a blow off top in interest rates. Now we have a blow off bottom. So let's look closely at what the bottom looked like. Classic expansion of volatility. This is exactly what a bottom looks like. This may not be the exact bottom, but somewhere around here. This should be on every trader's radar because you've got a 40-year trend. If that 40-year trend reverses, a whole lot of things change across the board. And I think that kind of fits with what we're seeing now. If we look at it on a weekly basis, we have a gap down and now a retest. I'm starting to think about interest rate reversal. That's what I'm saying. All right, that's probably enough for now.